Hey everybody, welcome back to the channel. Today I want to go over the PM silver bullet for Wednesday, November 15th. So the first thing we're going to do is turn on the Kraken Silver Bullet Pro indicator, and let's turn on the New York lunch. Let's just see where that is first. Okay, so there's the low and there's the high. So we're definitely in this range. Now if you were looking at this chart, would the buy side be your first target because price is closer, or is it closer to the New York lunch sell side? Obviously, it's the buy side. So our plan is right there, right? And then we'd like to see it, do a reversal pattern and come down here, take out lunch sell side, right? Now, the other option that price can do is it can come up here, it can come here, and it can come down. Now, this swing high here, optimal trade entry is probably in with this in between this fair value gap and that fair value gap. So come down here and up and then down, right? Those are your two options at this point, or what I'd be looking for. Obviously, because we're so close to the buy side, I'd like to see it get taken. Now, if it just stops here and comes all the way down to New York lunch sell side, I probably would have missed it, honestly. So we'll see what price does here. It starts the hour. I don't want it to take that. Delete that. Delete the take that. Okay, it looks like it's going to do our first one then, which was go through it and then reverse. Okay, let's raise this up just a little bit here. Okay, so let's pull our fib from the swing low to the swing high. Optimal trade entry is right here, right? Let's see, we got a fair value gap right there. We got a fair value gap right there. And we have an order block right there. Okay, so that's really what we're looking at in our PD arrays and the optimal trade entry. Why do I do that? When we're going long or short and it starts to retrace, pull back, whatever you want to call it, I'm pulling optimal trade entry. Why am I doing that? Because I know that if I'm going to enter a second position, or I can get a trade, enter a trade, if to stay in line with the market direction, it likes to come to optimal trade entry. Does it always? No. But I like to see that when it comes in here, I like to see these being respected. Now, if these get violated with any kind of like a big candle like this, or just get violated, close below this, then I'm looking to see, is it going to be immediately retrace back through them and then use them as support and up, or are they going to use this as an inversion fair value gaps and order block to go short? So I'm very interested in what happens in this range. Okay. Now, if there's a longer wick or rejection, then I'll probably take a trade here. But I'm looking for something in the bottom two, not the top one, because my stop would have to be pretty big to go down here. So I don't really want to have to do that. So let's see how, okay, I like that rejection. I like that one. Kind of figured that was, I don't, okay. Okay, see how it has a long rejection here? And where did that do? At the order block here. I'll move that as an order block here. Oops, there you go. All right, so I'm going to buy one there. And if I'm wrong, my stop's just right here. I've got a 10-point stop. So risking 200 bucks. Aiming for 41. Why am I aiming there? Let's pull our retracement leg here and see where that is at. There's our 2 standard deviations right there, and that's where we're aiming for. 2 standard deviations. That's a good spot there. It's above these relatively equal highs. It's above New York lunch buy side. So if it's going to, the next candle, again, it's going to be very telling. The next candle comes up, we're solid, we're good. We're expecting to go. Now if it comes down, I'm in some hot water. I'm probably just going to take it. I'm going to exit, honestly. Why? Because it's violated 1 PD array, 2 PD arrays, 3 PD arrays, and then lower. I don't need to take out my full stop. So this candle is going to tell the story. All right, there you go. And that's how a lot of it is. When you take optimal trade entry, you may enter here. It's scary, right? Because you're down, 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 close candles, long wick, longer wick, decent sized wick, and then you're gonna buy. Well, the next candle could take you out. Well, how many PD rays did it violate? Get out of your trade. Don't let it take your whole stop loss. To me, if this candle would have, let me draw this candle like I did in the last video here. I'm gonna make this a, oops, make this a black candle here. If this, if this candle would have gone here like this, I'd have got out. If it traded here and left a new fair value gap, like right here, I'd have got out. I mean, obviously, if it didn't take me out, I'd still be getting out. So, and the very next candle is very telling when you take optimal trade entry. You don't want to risk too much, and you don't want to let it play out. You're expecting it to come down in the optimal trade entry area and then hit it and then leave, not linger and come all the way through. And your stop always needs to be below the 1. All right, there, take out New York lunch. Okay, can you hit 2 standard deviations or not? Perfect. All right, flatten. All right, let's see what the rest of the week or the rest of the hour it turned out to be. Okay. All right. Let's take off the long position. And I've got, how many fibs do I got on here? Oh, several. Okay, so we came to the 1:30 hour and we saw that New York lunch was here, New York buy side was here. At the 2 o'clock hour, price was really close to taking out buy side liquidity. It didn't. It came up and then started retracing back down. So we know that it came so close that it's going to take that high. So we pulled our fib from this swing low to this swing high and got optimal trade entry area right here. We marked out our 3 PD arrays and price came in, stopped basically on the bottom of that order block. It did wick into this order block here, but that's fine. It closed in optimal trade entry here. And when we got into this trade, the very next candle is going to be very telling. If it was a down close candle, I'm exiting the trade and I'll take that minor loss. I'm cool with that. If the next candle was high like this, then I'm good. I'm fine. So that's kind of how I trade optimal trade entry. The very first candle is very telling. If it's just an indecision candle, doesn't create a fair value gap, I'll give it another candle. But if it breaks below another and it's lower than the 79 and closes below that, I know this one looks like it did, and it probably did close right there, but that's where I entered. If it closed down here, I'm probably getting out. I'm just saving my capital. But we didn't. It was a big candle, bullish candle, so we're fine. And it ended up coming taking out our 2 standard deviations because we pulled our manipulation leg and we got 2 standard deviations, and that was what our target was, which was above the New York lunch buy side liquidity target here and these relatively equal highs right here. As soon as it hit that, it hit it again, and then it started retracing, coming back down. So that is your PM Silver Bullet on Wednesday, November 15th, using the Kraken Silver Bullet Pro indicator.